Hello, everyone. Welcome to the weekly roundup. Today, we will cover interest rates, inflation, and earnings releases. Hello, Ben.
Hi, Eva.
Good
It's
week.
it's a good week. It's officially winter in Canada. We
Oh, yeah.
are under feet of snow, so that's nice.
Joy.
Yeah,
Uh,
but good
okay.
otherwise.
Okay, great. We'll start off with macroeconomic news. So, Bank of Canada cut rates down to 3.25%. Was this in line with market expectation? How is market taking this?
Yeah, so I think it's a great question. I mean, there's been lots of moving parts with rates this year. As you know, Bank of Canada started to cut earlier in the year, and then most recently now they've been quite aggressive. And it's been primarily driven off of weak economic numbers. And so we had a surprise unemployment increase in Canada last week. And so where the market was pricing in 25, but after the unemployment announcement, that moved up to like 45 basis points likelihood. And that's what it was up until they decided to cut on Wednesday. So 50 basis points. I think this falls in line with what our economics team's been thinking from the perspective is the economy slowing in Canada. Inflation's been higher than it maybe could have been for an extended period of time, and consumers are stretched in Canada. So, as the unemployment starts rising and consumers are under pressure, consumer confidence is extremely low in Canada as well. They decide to cut another 50 basis points, so that brings the overnight rate down to 3.25. And Market had priced it in, to your point, just about currency as well. We had a couple of meetings early in the week just talking about, well, what happens if they cut? How's the market going to react? Well, market's already priced in everything. So when they cut the 50 basis points on Wednesday, the Canadian dollar actually went up on that news because it anticipated something worse, maybe. And Tiff Macklin effectively said, we're going meeting by meeting. And right now the market's pricing in 25 basis points at their next meeting. So anything that would tilt that one way or the other might lead you to think there'd be further weakness in the Canadian dollar, and our economics team think that's probably the case. But so we're not going to go into too much detail on that this week. But we tilted to one side. Canadian dollar had been weak, and then when the announcement came off, there was a bit of a rally in the dollar temporarily.
Okay. Still on interest rates, but on the US side, annual inflation accelerated a little bit.
Hmm.
We also saw US budget deficits rise approximately 17% year on year. What does this mean for rate direction in the future?
Jeez, they couldn't get the printing press moving fast enough, I think. Yeah, and definitely in the last half of this year, the deficits increased dramatically. I mean, some of that's the old leadership moving out, trying to get everything done that they wanted to before they leave. So the funny thing is that it didn't affect the currency because the currency continued strong globally, and so the currency said, "We don't care." Um, and Bonds in the US didn't move too much. One of the slides I'll just show the differential in Canada and US bonds. But generally, the market didn't say too much. But to your point, inflation's a bit hotter, and the economy's been doing a little bit better. And so, a month ago, we thought it was kind of 50-50 whether they would cut rates or not in their meeting next Wednesday. But now that's 98% that they're going to cut rates 25 basis points next week. And I think that, the differentials of the central banks around the world, including the ECB, which cut on Wednesday or cut today, excuse me. Um, so they have a bit more room to cut rates, and it doesn't put too much pressure on their currency if they don't.
Okay. Let's go to the markets. A couple of earnings releases were expected this week.
Hmm.
Oracle, Adobe, Broadcom. Anything interesting here?
So, I mean, it shows how sensitive the market is to things where Adobe missed expectations a little bit. The stock was down, I don't know, 7, 8% last night. Not sure where we are exactly right now today, but certainly the market's been quite sensitive to a miss. And so they're down 14% now. So that gives you just kind of a sense of how the market reacts to that. Same with Broadcom and Oracle. The one surprise to the upside today was Ciena. Ciena is a optical company in Canada, or sorry, it's a US company, but they have a big presence here in Canada as well. So they had a good earnings beat. Sorry, they missed on earnings, but they had a good guidance forward, and the stock was up 15% at the open. So market's definitely sensitive to what's going on, and a small miss and a downgrade, market doesn't like that, and they'll sell off aggressively. So certainly interesting to continue to watch and pay attention to that.
Good. Anything else catch your eye this week?
So as I just followed things along, the volumes are a bit lighter. Today we have a interesting day where everything's down. So bonds are down, stocks are down, with the exception of oil and US dollar. But you get a combination of the two of them selling off together, which is a bit interesting. We're in tax loss selling season, so some of these stocks that have had rough years are getting beat up further. So, I'd look at that as potentially an opportunity in certain areas. You'd look at the names that have been beat up really hard and say, are these good business? And the market's just overreacted to that. So we continue to look at that. But nothing too material. The market's looking a little bit soft and quiet today.
Okay. Any portfolio changes?
So no changes, but lots of time looking at some potential ads. There's been a couple of companies which we may look to add, which we can update on the next couple of weeks as we do. A couple of ETF switches that I've looked at too. Is there a way potentially to maintain some market exposure with a little bit of downside protection? So I've started to look at that as an option. And so lots to cover that way. But no material changes this week.
Okay, great. Let's see the charts.
All right. Here we go. December 12th. So, of course, we're recording on Thursday now. So, anything that happens tomorrow, we certainly won't be discussing. The opinions, recommendations expressed will not necessarily be that of National Bank. It'll be us, world. So, lots of good research out this week. Our economics team put out an interesting piece where I grabbed this out of, really just talking about what Canada has proposed. If you think back to what they suggested in the budget in 2024, they're looking at the deficit to be below 40 billion. This is backwards looking, of course. Our deficit's probably going to be closer to 60 billion when we wrap things up. Maintain declining deficit to GDP ratio. I mean, that's certainly not happening either. And lowering the debt to GDP, that's also not happening. So when you look at what's going on in the Canadian economy right now, I mean, this was the goal, expectations set out by the government, and that has not played out that way. So hence the weaker economy, hence the weaker currency. The market's looking at this and saying we're not falling in line and achieving any of the budget things that we laid out last year. So that'll be something that we'll certainly be talking about later next week. And when we discuss what's happening next week, that'll be one of the things we'll have to pay attention to. So this is a great chart that just shows the a little bit about the job gains, the job losses, and trying to factor in the big population increase that we had in Canada, where you'd look at the blue line, which is what might be headline numbers, which say, okay, jobs numbers are actually a little bit better than expected if you take that into account. When you strip out that, which is the increasing labor force, the jobs numbers is a lot weaker and heading towards zero level. So certainly the economists of the world look at this and say, this is what is giving us concerns. This is what the Bank of Canada looks at as well and says why they're concerned about what's going on and really why they've been cutting rates more aggressively than we would have thought at the start of this year. And our team continues to believe that rates come down until at least the end of July next year. And that's based on current numbers that we're looking at. And then the last here is on bonds. And so this would be the blue line would be US and the red line would be Canada. And so this would be changes in 2-year yields. And so falling yields means rising prices. So when you look at this chart here, it says Canadian outperformance continues post-election. That means because yields have been falling in Canada, prices have been appreciating, that they've been outperforming. And then with the Canadian curve shifting decisively lower, also just a sense of the feeling for what's happening in the economy. We get lots of questions on this 0 to 5 year range, what's happening there. And this is a bit of a view for what's going to happen in the fixed rate mortgage market as well. So we've shifted from November 5th, that was the red line, to December 10th, just to give you a gauge that that whole yield curve has shifted lower with a view of what's happening in our economy. And so these are a couple of great charts just to think about what's been going on since we had the U.S. election, and there's still tons of ground to cover with what's going on in the world and lots of thinking around tariffs and so on and so forth. But I'd say from a where and how people are making money since the elections, at least in the Canadian market, that's an interesting place to look.
Oh, great. What's on the agenda for next week?
Yes. So two things. The budget
Yeah.
is supposed to come out in Canada on Monday. And so we will see what that looks like. Be interesting to see what's said, what's done in there. Hopefully there's some positive changes, so that'll be worth watching. And then, of course, on Wednesday we have the Federal Reserve, which will be a rate announcement. So those are two material things. As I say right now, the market's pricing in 25 basis point cut. Anything outside of that would be material. If they cut more or if they don't cut, that would have a big impact on asset prices. But right now, we anticipate quiet markets and they cut. We are still 2 weeks out from Christmas, or a week and a half now. So I'd expect that next week's probably the last busy-ish trading week, barring something surprise happening. So we'd be seeing if there's any interesting trades to make coming into the end of next week. But budget and FOMC on Wednesday would be the main things we'd be looking at.
Sounds good. Thank you, Ben.
Thank you.
For our clients, please reach out to me if you have any questions or if you'd like to book a portfolio review meeting with Ben. For everyone, please visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. Thank you for listening. Stay warm and have a great weekend.
Thanks. Take
Bye.
care. Bye.